Hey everyone, and welcome back to the video. In today's video, I'm going to be talking all about gold and why I personally don't invest in gold. So that's going to be the topic of today's video. I'm just going to break down everything I have to say about gold. And of course, because I'm not an investor in gold, there's not going to be a whole lot about investing in gold and how you could do it. There's going to be none of that, in fact. So if that's what you're looking for in this video, I'm sorry, but I'm actually going to be explaining to you why I think that from a value investing perspective, it really doesn't make any sense why you would invest in gold. So that's what we're going to talk about in today's video. And to just start that off, I guess the main thing is that there is a big difference between stocks and gold. So when you invest in a stock, you buy the asset at a certain price and you sell it at a different price in the future. And when you buy gold, you buy it at a certain price and you sell it at a different price in the future. So how are those two assets different? And the key difference is that the stocks are backed by a business. When you buy into a stock, you're buying a business which produces cash flow. When you buy into gold, you buy a block of gold and that's it. The gold doesn't do anything. So one produces cash on its own and one doesn't. And the reason that is important is because it means that you cannot do a discounted cash flow valuation. So when it comes to a business, for example, a stock, how I would personally calculate its value and how many value investors would calculate its value is we would try and estimate what those future cash inflows are going to be. How much is this business going to produce for us? If the business sells a certain amount of units and then they have this certain amount of costs, what's left over in profit each year for the next 10 years? And that number, the amount of cash the owners are going to get out of the company, is its value. So that's called a discounted cash flow. And you can't do that with gold because gold doesn't have any cash flows. The only cash flows are your cash outflow when you buy it and the cash inflow that you get when you sell it, which means that your profit, your return on investment in gold is entirely dependent on someone else paying more than you did for that asset. And while you might think that this is true for a stock as well, in many cases it is true. What you're buying is a business that produces cash. So in theory, you would never even have to sell the business and it would continue to produce a return for you. And for that reason, if a business is producing more and more cash over time, the value of the business is also going to go up so that you can actually come to an accurate estimation of how much you're going to be able to sell it for. The same cannot be said for something like gold. So the best way to think about this, I think, is you should imagine that you're buying an investment property instead of a business. So let's compare an investment property to gold. So if you buy an investment property, yes, you are hoping that you can sell that property for a higher price in the future. But even if you couldn't sell it for a higher price in the future, you can rent it out and you can get cash flows from the property itself. So you can get a return on your investment without even having to worry about whether or not you're going to be able to sell it for more in the future. Even if you bought the property and 10 years later you sold it for the same price, during that time, if you bought it in cash, then you would have received cash inflows in the form of rent. And the same is not true for gold. For gold, you need to make a profit on it. If you just buy a piece of gold and you hold it forever, you make nothing. You make a loss of whatever you paid for that gold. Because yes, you have the gold, but in order to make a return, you need to sell it. And with a property, like I just explained, or with a stock or a business, that is just not true. And the last reason, I guess, for why I don't invest in gold is because even if you could, so some people will argue that you can estimate where the price of gold is going to go, and therefore you can come up with a fair valuation of how much you're willing to pay now. And that might be true. And I'm sure it is true. I'm sure there are many things factors that go into the price of gold what its utility is, the supply of gold, how abundant it is. All of those things could possibly be used in order to calculate the price of it at some time in the future. But the final reason why I still don't invest in gold is simply because I do not understand it. Gold falls into the same category as most stocks and most businesses out there. It's something that I don't understand, and it's something that's outside my circle of competence. So everyone has a circle of competence, which is sort of a circle around and sort of separates the businesses that you understand and the businesses that you don't understand. And this circle can grow over time. Of course, it can go into different areas. You can learn more about a particular industry, but you ultimately always have this circle. And for me, within that circle is some types of consumer discretionary businesses, some kinds of consumer staples businesses, and other kinds of businesses. And one of the types of assets that is definitely outside my circle of competence is commodities, is gold and other commodities such as silver. And for that reason, dog's just got to be ruining my videos, doesn't it? And because it's outside my circle of competence, then I don't have confidence that I can predict what return I'm going to make on it. And for that simple reason, if I was to invest in it, I would be gambling. If you're investing in something where you don't have confidence that you're going to get a particular return, that you're very confident that based on your analysis, you're going to get your principal back and a satisfactory return, then you are gambling or speculating, as Benjamin Graham would call it. So those are kind of the main reasons why I just don't invest in gold. And I'd love to hear your thoughts on why you do or don't invest in gold. And if you are investing in gold, then I'm curious to see sort of what metrics you use in order to determine whether or not it's a good price to pay right now, and how do you calculate where the price of gold is going to be in the future? Or if not, what do you use it for? Do you use it as a hedge against the economy or something like that? So I'd love to hear your thoughts down there. And of course, if you did enjoy the video, make sure you leave a like, and make sure you subscribe if you're new around here and you want to see more videos like this. And let me know what videos you want to see in the future down there as well. I'm always taking video ideas from subscribers. This was actually one of them. So if you have any video ideas, make sure you leave them down there as well. But I hope you guys have a great day, and I'll see you in the next one.